Hi there, my name is Danny Fitzgerald. I'm the Associate Regional Director for the San Diego and Imperial Small Business Development Center. This on-demand webinar is to talk about the Paycheck Protection Program, the forgiveness of the loan. Basically, once you get the money, what do you need to do to ensure you can maximize the forgivability of this particular loan? It's important to note that this is being recorded on April 26th, 2020, because this is based on the guidance we have as of today. So real quick, who are we? Who's the Small Business Development Center? It's important to note that we are funded by the U.S. Small Business Administration, as well as the California Governor's Office of Business and Economic Development. Those two allow us to be able to provide all of our services free for you. We provide primarily one-on-one business advising. We also provide training sessions such as this one, as well as live webinars on a variety of topics, on everything from finance, business planning, operations, accounting, bookkeeping, marketing, and much more. So please check back. We're going to continuously have new webinars. We're going to have webinars as certainly as this crisis continues. Of course, we have a large number of service locations. All of our staff is working online during these times. We have a staff of well over 90 expert business advisors who are here to be able to assist you. So, the Paycheck Protection Plan. Of course, this is a program that came out just under a month ago and was signed into law on March 27th by the President after it passed by Congress and opened up a week later. And so the key component of this is of course a forgivable loan. So this is a loan from a bank or another lender. You probably got your loan from Bank X, Bank Y, or lender X or Y. And those are the folks that really are going to be the primary folks working with you. And it's important to note that it's the bank that will be providing what that forgiveness is. And so this is a direct quote from the limited guidance that we have. So how can you request loan forgiveness? You submit a request to the lender that is servicing the loan. So who you got the loan from. You will submit a request that includes a documentation to verify your employee count, your pay rates, basically all your payroll records, as well as whatever other payments you made of eligible expenses, which we'll talk about. Also, you will be certifying the documents are true. So that's what's important. Just as you certified a number of different things, for example, that you certified that you require this loan due to economic harm, that and so that type of things are what's important. And so once you submit that, then the lender is who is making that decision on the forgiveness, and they will have 60 days to do so. So it's important to work with your lender. The lenders are going to continue to get new guidance. This is based on the guidance they have as well. This is not something that they have that no one else has. So this is going to continue to change. So again, it's important to recognize the bank or lending institution you got the loan from is who will provide the forgiveness. They'll be documenting that, and then they'll be communicating to the U.S. Small Business Administration. So as a reminder, you're eligible for this particular program if you're a small business or a nonprofit 501c, as well as you were in operation prior to February 15th, 2020, paid employees, or you paid yourself as the owner via wage or owner drop. We'll talk about that. And so certainly sole proprietors are eligible for this program, and I'll get into that a little bit more along with this. And hopefully, again, this is primarily for folks who've already received a loan, but it's important to understand how the owner draw is calculated, which is even more important for the forgivability. So again, forgiveness of the loan is done on demonstrated payroll, rent, mortgage interest, or utility costs made during an 8-week period. That 8-week period is super, super important because it's only during 8 weeks those costs that occur during that time frame are what are eligible for forgiveness. Here are two important sites also that have additional information about the Paycheck Protection Program, both from the Small Business Administration as well as Treasury. Here on the YouTube page, I do have those links available, but certainly here they are. That's a good way to do it. Also, since this is a loan, if all or not part of it is not forgiven, it is a 2-year loan. And so from the date you get the loan for 2 years, the interest is 1%. You do not have to make any payments on this for 6 months, but interest does accrue. So during that time frame, during those 6 months in which you're not making payments, interest is accruing. But again, interest at 1%. So it's important to understand the basic components of this. So you can get the loan forgiven, all or in part, and if the loan is not forgiven, it does remain a loan, and you have 2 years to pay that off. 2 years from the date you got the loan. So what counts? Let's first talk about payroll. The payroll is important because at least 75% of the forgivable portion, at least 75% must be done on payroll. So what counts? Wages. All the wages you would typically pay, including commissions, cash tips, etc. State payroll taxes. So that would only be the state payroll taxes, not the federal employer paid taxes. So FICA and Medicare do not count, but the state payroll taxes do count. Any payment for any leave that would particularly occur. This is important because maybe that's what you're considering your employees are on during this time period, is that they're on leave. Because it's not super critical that they're working. What's super critical is that you're paying them as though they were working, whatever their typical schedule would be. And so that's what's super important. This is not that they're actually working. They may be working, they may not be working, they may be working reduced hours. So it's important to recognize that. So that's why it's important to recognize any leave is also included. And that may be what you're calling these 8 weeks, especially if, let's say, you have an employee that has to take care of kids and are unable to work, or you only have reduced hours that are able to work, or your gym, you're closed and you're unable to have anyone come in and do any work. So that's what's also important. In addition, the employer portion of the group health and retirement plans, including workers' compensation. So the group health insurance that you pay as an employer, the retirement portion that you pay as an employer, and workers' compensation, that's all included. Also, if you're a sole proprietor, your owner's compensation in the form of a draw or net profit can also be included. If you are an LLC, an S Corp, or a C Corp, and you take a distribution in the form of a K1, that is not included. It only is for sole proprietor. So it's for W-2 wages or owner draw for someone who has a Schedule C sole proprietor situation. So what's excluded? Any employee whose principal residence is outside the United States. That's important. Make sure, so double check the addresses of your employees in case you happen to have any employees who do live in Baja. That's something that's important here in San Diego and Imperial. You need to make sure, see if they reside in the state of Baja in Mexico, they obviously would not be eligible. Also, any compensation in excess of $100,000 per year. So what that means is up to $1,923.08 per week is allowed. 100,000 divided by 52. And so that is what is allowed. So if you have somebody who makes over $100,000, you only include the portion of their pay up to $1,923.08 in the forgiveness document. So that's what's important. Sole proprietor. It's important to kind of recognize this. This is the calculation that you do for the loan, but it's important equally for the calculation for the forgiveness. So the reality is if you haven't filed your 2019 taxes, you really should have a draft version done because you need to look at your schedule, your Form 1040 Schedule C, line 31 net profit. That's what the basis for the calculation is. And so how you would calculate your weekly is you take that, you divide it by 52, and that's how you would get the weekly portion. So you take that, divide by 52, multiply by 8, that's what's allowed to be forgiven. And so it has to be based on your 2019 tax return. And base is what you really have to look at. So what will probably happen is your bank will require to see your 2019 tax return to be able to calculate what is forgivable. And so you should have that completed and have that available for you to provide to the lender. That's a critical document that's also important if you're including your owner draw as a sole proprietor. So a couple of things that are important with timing. Number one is the banks must provide a disbursement of the loan to you. So let's say your loan's approved, but you don't get you haven't received the money yet. So you're going, when am I going to get the money? It's a simple answer. They have to get it to you within no less than 10 calendar days after approval. The reality is we're seeing banks getting it to folks pretty quickly. So that really hasn't become an issue. But what is important is to recognize that the approval is kind of the beginning of your pre-clock before the clock starts ticking. Because the day you get the money is when the 8-week clock for forgivable activity begins. So if you receive your money tomorrow, April 27th, that means the 8 weeks start on April 27th. And so that's important to understand. So all the expenses that occur from April 27th for the next 8 weeks are eligible for forgiveness. Expenses that occur before then or after that are not eligible. So that's what's super important. So understand the day you get the loan is the day those 8 weeks start. And again, to reiterate, at least 75% must be for payroll expenses. And so it's very, very important. So tip I'm going to talk about here momentarily is the moment you get the approval is when you should, if you have any furloughed employees, you should rehire them, or ones you've reduced hours for, you should rehire them. You should get them back up to what their particular hours would be. So that's really important to do. So that way you're ready to go. So when that 8-week clock starts ticking, you're paying them for their scheduled, their normally scheduled time, even if they are not working. If they're at home taking care of kids, if they're at home because you don't have work for them, if they were scheduled to work 20 hours per week, you pay them 20 hours per week. If they're scheduled to work 40 hours a week, you're paying them for those 40 hours per week. That's what's super important. Even if they're not actually doing work, you're paying them as though they were doing the work. That circles all the way back to the intent of this program that I want to stress very, very hard. The intent of this program is for you as an employer to receive a bridge loan to keep your employees paid. They can pay their rent, their mortgage, their grocery bills, etc. during this time frame and do not have to go on unemployment. Then when you're able to reopen your business, all or in part, whatever that's going to look like, and no, we don't know what that's going to look like, then you'll still have those same quality staff that has been hired, that works for you, that's trained, and you're able to keep them. That is super, super important. So payroll, that's what's part of it. The other component is 25%, no more than, on rent, mortgage interest, and utilities. But again, expenses must occur during the 8-week time frame. So again, it cannot be expenses that occurred in March. They cannot be expenses that occurred the first 2 weeks of April. It has to be the expenses that occurred during that 8-week time frame. So it's very, very, very important to save detailed records, because again, that's the information you're going to be having to provide to your lender, bank, lender, who that is, for all of that type of information. So it's super important. Save canceled checks, make sure it's crystal clear. You have the bank statements, so you have to show all of those actual payments did occur. So that's also what's important, is in terms of that. So let's talk again about the employees, because that's one of the most critical elements. And so because the forgiveness of the loan is based on the employer maintaining or rehiring employees and maintaining the salary levels. If you do not do that, your forgiveness will be reduced if your full-time headcount declines. In a little bit, I'll talk about what that full-time headcount looks like. And so that's how it is. The salaries or wages decrease, that's just take a look at what you paid everybody in January, and that's really going to be your best example. So key things. Number one, number of staff. So if you decrease your full-time employee headcount, a little bit, I'll tell you how to calculate what that full-time employee headcount is, or you reduce the level of payroll. So if you decrease the wages by more than 25% for any employee that made less than $100,000 annualized in 2019. So if you cut their pay, or you cut their hours that they're working with this, that will be reduced. And the rehiring time for it, you have to get everybody rehired by June 30th. So basically from April 26th, today, anyone that was furloughed prior to today, you need to rehire. And so that's what's critical. Don't continue to furlough people if you haven't furloughed them. But if you have anyone that you furloughed prior to today, you need to get them back on the books for them to count. It does not have to be the same person, but it does have to be the same count, because you may have had somebody who worked for you in January, they quit the beginning of March, and you hired somebody since then. That's fine. Certainly you could have those types of transitions. It doesn't have to be the same people. It does have to be the same number of full-time equivalent employees, and they have to be earning the same amount of money within 25%. That's what's important. Keep some payroll records. Here's a quick sample, something that would be from an older version of QuickBooks. Your payroll taxes, same sort of thing, because you're not including all of that, but that's a critical component of your payroll records. And of course, your utility bills, your SDG&E bill, or whatever your utility providers are, as well as whatever your particular water bill might be. Save all of those invoices. Again, what's critical is during that 8-week time frame, that's when those expenses have to occur. So that means you are going to have to look at what those expenses are, because it's not going to match the exact same 8 weeks. And so you're going to pay a portion of that from your PPP and a portion of that from other capital that you may have. And so that's what's important to recognize. It does, the 8 weeks most likely will not match. One of the invoices will match completely, but most likely you're going to have to basically partial pay two different invoices as well for that. Same thing with your rent payment. Obviously, if you got the loan starting on Monday, you'd be able to count the last week of April, all of May, and a portion of June. And so you're going to have to balance that out and determine what your basically your average daily utility cost is and what your average daily rent cost would be to be able to actually do this particular calculation. So rent's easy. You just divide it by the particular number of days in the month. And utility, you're going to have to look at what that average usage rate would be and what that average daily cost would be. And that's what you're able to utilize for your PPP forgiveness. So as I said, this is how you can calculate your FTE count. And this is a rough way in which you're able to do it. What's good is there's a lot of different calculators out there. Here's one particular link from the Society of Human Resource Management, because you had to calculate your full-time equivalent counts in terms of things for the ACA. So this is not something that's new. It uses a similar type of formula. So roughly it's like this. Take the total number of employees you have working full-time, 35 to 40 hours per week. Those are all FTEs. Then for your part-time employees, add the total number of hours worked for part-time employees for each week. Take January, for example, take a 4-week stretch, say between January 15th and February 15th, approximately, or January 10th to February 10th. Take those total number of hours worked. Then you divide that by 40, if that's your full-time work week. If your full-time work week is 35, divide by 35. It'll be one of those two. So for example, if you have 5 employees, part-time employees, they worked a total of 140 hours during an average week. So you divide 140 by 40, that gets you 3.5 full-time FTE employees. So that's the count that you have to maintain. So look at what that particular math was and make sure you're rehiring sufficient numbers that would get to that same number for what your average would be in the early part of 2020. So use at least 4 weeks prior to February 15th to determine what that particular average is. And again, here's that particular link. There's a lot of different explainers out there for a basic calculator for that. So what are a couple of key tips, important tips? Number 1, rehire your furloughed staff when the loan approval occurs. So if you get your loan approval tomorrow, you haven't got the funds yet, then you're able to actually hire those staff back, get them back on the payroll, so that makes sure you're incurring all those particular payroll expenses. Also, be very, very, very clear on what the expenses are that are going to the PPP funds. So set up a separate accounting system or a separate cost center or a separate account code or a separate code in your software. That could be a shadow budget you run in Excel. That could be a separate account code or a separate account code in QuickBooks or any other software you have. I've even talked to some that are actually having it be in a separate bank account. So that way all those expenses are super clear. Make sure for every check you cut, every piece of payroll you do, that the accounting's clearly defined that this is eligible for PPP funds. For example, you get your money tomorrow, you pay your May rent. Obviously, you're clearly going to want to define that as part of your PPP eligible. So that's what's important. Also, make sure you're communicating with your lender for any additional guidance. What's going to happen is sometime soon, we don't know when, the SBA and the U.S. Treasury are going to put out additional forgiveness guidance for what lenders are going to need to have, what types of documentation they're required to collect and maintain, so that way they can grant forgiveness to you, the business owner. So make sure you're communicating with them, make sure you know what you're doing with them and that you're handling this properly, because they're going to be the ones who ultimately do give that forgiveness to you. They're the ones who are going to receive your payroll documents. They're the ones who are going to receive the canceled check showing you paid your rent, etc. So that's why it's super important for them. A couple extra quick things we just need to make sure we talk about. Beware of scams, fraud schemes. There's a lot of that going on. Make sure as you're providing this information, that's why it's communicating just with your lender. If someone else says, hey, I see you got a PPP, I can show you how to get your forgiveness. Don't send it to them unless you know it's from your banker. Just be very, very careful for that. Look out for that. Look out for that. Tell your fellow small business owners to be careful for that type of information. Also, most likely you applied for an economic injury disaster loan. If it is somebody that's not from the SBA, it's not an email from sba.gov, don't transmit that information. All the additional documentation they're requiring is done through a portal. So they will not be asking you to email those types of documents. They'll ask you to upload those documents to a portal. That way it's very, very secured. Also, if you're also working on your EIDL, just wanted to show this, the best way to reach them is actually to call them at 800-659-2955. And so that's the best way to get that information. Last but not least, use us for help. That's what the Small Business Development Center is here to do. Like I said, we've got over 90 advisors working day in, day out. We've helped thousands of businesses so far since this disaster was declared, and we're continuing to help you. So if you're having some of this is confusing, you need some guidance, you have a kind of a funky situation, even if you just want a second set of eyes to make sure that you're accounting for all of this information correctly, use us. Contact us, get your appointment set up with your business advisor, and we'll be able to help you do all of that. Again, we're the Small Business Development Center. We're here to help you. Hopefully, good luck with that Paycheck Protection Program. We're happy you were able to get the loan, and this is going to be some that will actually hopefully help you and be a bridge until we're able to reopen and get the economy going again. Thank you.